Welcome to the Randy Selzer Real Estate Podcast, where we discuss important topics for buyers, sellers, and investors in the Toronto area real estate market. Here's your host, Randy Selzer.
Hello, everybody. Welcome back to the channel. Welcome back to my YouTube channel and also to the podcast. Today, we're revisiting with a good friend of mine, Denise Pisani, who is an expert mortgage person here in the city of Mississauga.
Good morning, everybody.
Hi, Denise. Good to see you again. And Denise is affiliated actually with three different companies: Mortgage Center Canada, Get a Better Mortgage, and her own personal corporation, Mortgage in the City. So nice to see you again.
Nice to see you, Randy.
We meet again. And so what have you been up to? I haven't talked to you for a couple of weeks. And
it's been crazy. The market is so crazy. I can't even keep up, I'll tell you.
It's
people
weird.
are refinancing to pull equity out to purchase other properties.
Yep.
I guess owning residential or commercial homes is like a huge benefit to your portfolio.
The beat goes on. People there's this real estate frenzy that's been going on here for like 20 years. And I guess it's a perfect storm. You know, we've got the combo of the low rates and immigration and a decent economy. It's a great place to be, I guess. Although the prices are out of sight. They really are. But I saw you, we're connected on Facebook as well. I saw you went to a hockey game last week. You went to a Toronto Maple Leafs game.
I did. And I must have brought them some good luck because
they won.
A shutout. Yeah.
I'm jealous. I haven't been to a Leafs game. Well, since COVID, I haven't done anything for a couple of years, but I've been to a Maple Leafs game in probably 4 or 5 years. So I saw you there. I was very jealous.
You know what? I don't go very often, but I do get invites from my lenders that I support and send business to. So obviously,
very nice.
I can't decline, right? I have to go. So
well, Toronto, Toronto has a lot of sports teams, but I think at its heart, it's still a hockey town. I really do believe that.
It was really great. I think the vibe was really different. We just needed this. We need to get out. Everybody had their masks on. I was kind of surprised, actually. People sitting down actually had masks on too. They didn't take them off. So
the energy was good?
The energy was really good. I think being cooped up for 2 years, everybody was really excited to get out. So it was really nice. Yeah.
That's great. Well, maybe they'll win one time. You never know. They'll win the championship and the city will go completely ballistic.
Oh my gosh, that's a dream come true. I really would love them to win for my father. That's for sure.
Oh, okay.
He's been waiting for like
1967
years. Yeah,
I know. It's.
I know, right?
We won't get into that, but God bless the Maple Leafs. That's all I
exactly. I'm just trying to look for my little cheat sheet here that we have that on the topic we're going to have today.
No problem. Well, I can start a little preamble here because Denise and I talked about what should we talk about next. And she has suggested financing for multiplex properties, which is a very interesting topic. And I guess we should start maybe by defining what is a multiplex property. And maybe I'll give you what my understanding is, and maybe I'm right or wrong, I don't know. But my understanding is that a multiplex property is a single address with one municipal address that has more than one family living there. So it could be 2 or more families that are living in that property. And this is not including like a basement apartment. That's something different. That's not multiplex. And a semi-detached is not a multiplex because it's 2 separate addresses, right?
Right.
It's different. They're joined together, but it's 2 separate addresses. But a multiplex is like a duplex where you've got somebody living on top of somebody else, where you might have to go up a set of stairs and then there's another apartment upstairs, or a triplex or a fourplex, and so on and up.
And registered with the city, the registration office, that it is a legal duplex, meaning that it's gone through all the fire requirements and the city recognizes it as a 2 family dwelling.
Okay, perfect. And today we're going to talk about multiplex, but we're talking about residential multiplex. We're not talking about commercial, where there could be a small commercial building with several retail tenants. We're talking about residential today.
This is, completely residential.
Okay.
Exactly.
Perfect. Okay. Well, I think this is really a good topic right now, because what I'm seeing, again, real estate's been so good to so many people for so long here in the Greater Toronto area. that people seem to be branching out a little bit and looking for ways to scale their investments. So in the past, like 10 years ago, it was only a small number of people that were interested in multiplex. Typically, most people would go out and buy a condo, right? They buy a condo for their investment. So they'd have one rental check coming in every month from one tenant.
Right.
But this way, by a multiplex, you can have not one check, but you can have 2, 3, 4, or 10 or 12 checks coming in every month from a multiplex investment. So there seems to be, I'm noticing, more people calling about that, and they're hard to find. They're really, and the other thing I've noticed is that people are going further afield. So if they're looking to buy, I want to buy like an 8-unit small apartment building, they're going out to places like Kitchener and Guelph and Brantford and, places like that, because they're more affordable out there. But definitely, I think we're in good time here with this topic, and I'm sure something must have triggered when you suggested that. So there is demand out there. Absolutely.
Yeah, there is. I'm getting a lot of phone calls for it. Today, though, I'm going to talk mostly about between 1 to 4 units.
Okay, perfect.
Because anything above 4 units it's a completely different mortgage. It's a commercial mortgage.
Okay.
So that's something to keep in mind too. So it's easier to lend to borrow
up to
on
4.
between like a duplex forward to 4.
Okay.
Yeah.
So you
or
can
even
buy
5 units.
You can buy up to 4 or 5 and not have to get a commercial mortgage. These are still residential mortgages.
Exactly.
Point number 1. Good point.
Exactly. Yeah.
Okay.
Yeah.
Very good.
So most banks, like your TDs, your Scotia, your Royal Bank, your CIBC, they will mortgage up to 5. Anything above 5, you're talking commercial financing after that point. Yeah. Okay. It's a business. Good, you're like you just said, you're collecting 12 checks. Right. That's a business. You need management. It's It's far more involved than a 4-plex.
Okay. Okay.
Yeah.
Good to know. Okay. So, well, I'm gonna kind of turn it over to you, because again, there's a lot of I don't want to say complexity, but there's a lot of details when you get into something like this. Like, for example, a first question might be, well, what kind of down payment would a person need?
Right.
You can buy a house with 5% down in theory. What about buying something multiplex?
Right. So it's very more complex than a regular mortgage. So for someone calling me and saying, hey, I want to purchase a home, can I get pre-qualified?
Right.
It's a different process, definitely. So the way the bank looks at it, so anything 1 and 2 unit, so it's called a duplex.
Right.
So with a duplex, you can purchase with 5% down, but keep in mind that's under 500,000. And I don't think you can get that anymore. So anything
not locally.
Yeah, that's for sure, right? In the GTA for sure. So now we're talking 500 plus for a duplex.
Yep.
So if you were to purchase a duplex, for example, for 600,000, the first 500,000 is 5%. So it would be 5% would be 25,000. So anything over and above 500,000. So the difference between 5 and 600,000 is 100,000.
Yep.
That 100,000 is 10%.
Okay.
So you're looking at $10,000 down payment for the 100,000.
Right.
And the first 500,000 is 25,000. So if you were to purchase a duplex for 600,000, the minimum down would be $35,000.
Okay.
So 5%. Yeah. 25 plus the 10.
I'm following you here, and I don't follow these things. I'm not great at this stuff, so but that makes sense. And
so you would need a minimum of 35 down.
Right.
But the key thing to remember is you have to occupy one of the units. So one of the units, that's called owner occupied. Okay. So if you were to live on the upstairs and you would rent the downstairs, or vice versa, or not downstairs, but it's a duplex, right? So someone, they could be side by side, or they could be top and bottom. I guess depending on
So that's a very interesting distinction, because someone might say, okay, I want to buy an investment just as fully tenanted, or someone might say, I want to buy an investment and I'm going to live in one of the units. So that's a key distinction there.
Yes, it is.
Okay.
Yeah, so if you are going to live in one of the units, you can put as little as whatever that calculates to, 6% down.
Right.
Okay, that's no problem as long as it's owner occupied. But if a client wanted to purchase a duplex and not live in it,
Right.
like solely for investment purposes, so they
Right.
want to rent the top and the bottom,
Right.
it's 20% down.
Okay, so 20%. Okay.
Yeah,
Which is
so
is very okay. So actually, there is a great incentive there if you are going to live in one of the units. What if it's a triplex? What if it's 3 units? And you're going to live in one? Same idea.
Thing.
So 5% down.
It would be actually 10%. Anything more than a duplex.
Oh,
So
okay.
3, 4, and 5 is 10. Yeah, there's a lot to know when it comes to these
Rule of thumb. Call your mortgage broker first.
That's the
Denise.
last question on the list. What should I do first if I'm interested in purchasing a multiplex? You know what?
Yeah.
Call a mortgage broker and let's go through your options, because there is so many different variables involved in purchasing a multiplex.
Okay.
But yeah, just one, if you're purchasing a duplex, it's minimum down, owner occupied. If it's not owner occupied, it's 20% down.
Okay, which is very, very typical for most investments.
Yeah, it is. It's most of the time, but I'm doing a little bit of both, because people are buying duplexes and owning half of it's 1,200 square feet.
Yep.
So, it's almost like buying a condo. But then again, depending on the price point, because prices are a little bit out of whack now. They're so
they are close to the city or in the city, certainly. But, there's people buying way out, like, I don't know, Innisfil or Huntsville. There's people buying all over the place.
Yeah, Guelph, St. Catharines, Waterloo, huge for these types of units.
They are.
Yeah, Port Credit has all along the lakeshore. You can find numerous, but you're buying $1 million plus.
Oh, huge. So, way more. I don't know if you know a street called Ben McCree in Port Credit.
Yes, I've heard. Yes.
I almost bought something there once similar to this. And I didn't, naturally. And today it's very close to the lake. And today my lifestyle would be completely different if I had bought that years ago. And even back then it was expensive because of the location. But these can be so these can be great investments.
Getting like a lot of the phone calls I'm getting are for Guelph, Waterloo, Hamilton, St. Catharines.
Believe it.
Those areas.
Yep, because they're the price point, you can still make money because you can buy it at a point where
they're in the 800s.
Not bad for two properties.
I just did a mortgage for somebody last week.
Yep.
It was around $870 for a duplex.
That's 2 houses though. That's not bad.
It's and you think if you're renting for $2,000, $2,000 per month,
easy,
it's paying for almost half of the expenses. So you'd be living for almost like renting.
Yep, I agree. Yep, that's a lot of people doing that. The GTA is spreading out. I mean, our market is definitely spreading out into further areas. They're not even suburban. They're sort of ex-urban, like different cities.
So just keep in mind too, if you are purchasing a duplex with the minimum down, like the 6%, like I told you, the 5% for the first 500 and over and above is 10%, there are fees involved.
Okay. Good question.
We do have to go to an insurer to get this insured, because of course, anything 20% or less, we have to go to an insurance company. Those insurance companies being Sagen, formerly Genworth Canada, CMHC, or Canada Guarantee. Those are the 3 insurance companies that we would need to go to. They need to approve the file as well. And they are insuring it for the bank. And because of that, there are fees involved. Those insurance premiums get added to the mortgage. They're not an extra expense on closing. So they do get added to the mortgage. So for example, for the minimum down, like we spoke about, you're looking at a 4% insurance premium on top.
That's a big hit.
It is a big hit, but you got to look at, if you were to purchase at Ben McCrae, for example, how much money would you have made during the years? You would have made that insurance premium back. And you've got to look at the fact that if you are owner occupying, because this is what would be happening in this duplex situation. So you're going to pay the minimum down, pay the insurance premium, and owner occupy. You're not paying rent anymore. So,
good point.
so hopefully you're gonna make that back with your investment increasing, and you're not paying rent anymore. But there is a fee involved to do that.
Okay. Well, that makes sense. That makes sense.
Yeah.
In terms of interest rates, like, can you get normal commercial interest
Yes.
rates that you would?
So if you're purchasing anything fourplex, fiveplex,
Yep.
it is regular mortgage rate, residential mortgage rates, as
2%
long as you
or less.
are owner occupying.
Right. And if you're not,
Okay.
What
if you're not, then the rates may differ.
Okay.
They may jump into your investment rates,
Okay.
which is usually a quarter point higher than mortgage residential rates, primary rate.
Small difference.
Yeah.
Small difference.
Yeah, small difference.
Okay. And I'm guessing on any kind of mortgage application, they're going to be looking at cash flow for existing tenants, that sort of thing, or is that?
Exactly. We do take the cash flow. Your income at your job needs to qualify.
Sure.
You need to help. This will help qualify, but we do take the rental income as well as helping to qualify, usually 50% of that.
That's right. Okay.
So if the rent is $2,000 for the other unit, we would use $1,000 of that per month to help with rental
to justify the loan
offsize. So that would be $12,000 we would add to your monthly income.
That's so interesting.
Mm-hmm.
I've often said this, my biggest regret in my career was not buying more real estate.
I know.
And, you know,
I hear you.
20 years ago, nobody knew. Like nobody.
Yeah.
If I had told anybody 20 years ago that, you know, your house, which today is worth 300, is going to be worth 1.2 million in 20 years, they would have thought I was off my rocker. They really would have. But so nobody knew. But these are very popular. And again, it's a way to scale your investment where you can get, it's like buying, if you're buying a fourplex, that's like buying 4 houses basically, because you're getting.
Exactly.
Yeah.
Well, the fourplexes, you're getting into the 2+ million too, right?
Oh, yeah.
So it's huge. Yeah.
You have
but
to crunch the
definitely
numbers.
there are people out there who obviously they are still selling. So
like hotcakes.
Yes, exactly. Right. And just to keep in mind too, if we do go through the insurance company, like I told you, CMHC, Sagen, and you have to pay those fees, the max amortization is 25 years.
That's right.
So, so you'd have to, the payments will increase slightly, but if you're doing 20% down, if you're putting 20% down, we can go to 30 years.
Okay. Perfect.
No fees. Yeah.
Good to know.
In some cases. Yeah.
Amazing. That's the beauty of real estate. There's so many options out there. You know, you can buy a pre-construction condo. You can buy an existing house. You can buy a multiplex. There's so many different ways to invest in real estate. And that's why I love this business. I really do. And plus the fact that we're always learning, no matter what. There's always new stuff to learn.
And if you own property now, the equity in the property is doing nothing for you. What you should be doing is increasing that mortgage or taking out a line of credit.
Right.
Take the equity out of that house and do what is best. Purchase real estate, whether it be a small 1-bedroom condo or a duplex or a townhouse. Having real estate is key. You need to have a little bit of everything: RSPs, real estate, TFSAs, bank accounts. Spread all your eggs out in different baskets so you can have a really good financial portfolio.
I'm absolutely with you on that. Absolutely. And I think I'm looking around these days, and there seems to be a lot of inflation happening in the world. I think what happened, for most countries in the world, is when COVID hit, they started printing money to try to reflate the economies. They were worried that their economies would crash. So that's where you see all these payments, like the CERB payments, and different grants and stuff, and not just in Canada, but all over the place, especially in the U.S. And what happens when they start printing money like that? And then in the US, it's just like trillions of dollars where they're just printing it, is usually inflation. History has shown that it basically kind of devalues the currency because they're just printing it indefinitely. And so things start to get inflated. And that's why we're seeing right now in everything, whether it's going to the grocery store or filling your car up with gas. I got to get a Tesla, honestly. Filling your car up, it's $100. A year ago, it was 60 for my car, and I just have a little car. And there's a lot of inflation, and that is going to get reflected even more so in real estate. And I think real estate has got to be the best hedge against inflation there is. It has to be. And so that's just something to keep in mind. So I'm ready to,
100%.
let's go buy a multiplex. Come on, let's go.
Let's do it.
The trick is to find one. That's a reasonable
Oh
price.
yeah. Like I told you, my client was looking for, I think it's safe to say 18 months, between 18 months and 2 years.
I believe it.
He finally landed one last week.
Oh,
in
congrats.
Guelph.
So, congrats to them. That's fantastic.
Yeah, so it is tough. It's been multiple offers as well.
Yep.
But this one that he ended up getting, there was only one other offer. So he had a little
wow.
bit of better chance. But the ones previous, he was like minimum 8 offers a time.
Yep.
At a time.
That's a lucky
offer.
person.
Yeah.
I've seen just in the last, this past month, even just semi-detached here in Mississauga, where there's 10, 14, 20 offers on a semi. And I saw one that went $250,000 over the asking price for a semi-detached.
Yeah,
they were asking like $999. It went for 1.25. What?
Yeah.
What? A semi? So there's some craziness going on out there, but that just shows you how much people want real estate. And,
yeah, exactly.
Yeah. Anyways, great topic.
It was amazing. You know what? It's quick, to the point. 1 to 2 unit duplex.
Yep.
Minimum down, owner occupied. You don't want to own it. Sorry, you don't want to live in it. 20% down.
Right.
And you can go up to 5 units with a lender. There are fees involved if you're putting less than 20% down.
Sure.
And yeah, but get pre-qualified if this is something you want to do or consider. You can increase your existing mortgage on your primary home, pull out the equity, and start looking for a duplex or a multiplex.
Denise, it's always a pleasure to talk to you. Thank you for coming on board again today.
Thank you so much, Randy, for having me.
Yeah, no, it's my pleasure. And for those of you watching this on YouTube, if you like what you're seeing today, subscribe to my channel. I was going to say our channel. Subscribe to my channel and give us a like and hit that bell notification button so that you'll be notified the next time another video comes up. And you can also listen to this on our podcast on Podbean, and it's syndicated all over the place on iTunes and Stitcher and Spotify. Anywhere that you find a podcast, you can find this as well. So
and I'm on Instagram as well at Mortgage in the City. So if you want any details, you want to increase your knowledge on lending and mortgages, you can follow me on Instagram.
That's a great suggestion right there, folks. Do it. And Denise, I'll put your contact info underneath as well so people can get in touch with you. But always a pleasure. Awesome. Always a pleasure to see you. Maybe I'll bump into you at the next Leafs game. You never know. And
that would be great. That would be great.
At the Stanley Cup fight. No, maybe not. But anyway, so we'll see you again soon. And
all righty. Thanks so much, Randy.
Okay. Take care.
Have a good day. Bye-bye.
Okay. Bye.